Mike, thank you so much for coming back on the podcast. I believe you were here maybe 5 years ago, and we ran into each other at an event, and we thought it would be a great idea to have you back. But
Yeah.
first, why don't you tell us a little bit about you?
Yeah. Well, you know what? Thanks for having me back. And, it has been a while, that's for sure. And it was good to run into you at the Bronson's dinner event and reconnect. So I'm glad we had the opportunity to do that. So, um, yeah, I'm Mike Morawski. I am in Southern California. I have been in the real estate space for about 30 years. I've written a couple of books. I have a bestseller on the market right now called Multifamily Investment Secrets. I'm an owner operator of multifamily, but do a lot of capital raising and um, do some coaching and have a coaching platform that I work with individuals on and help them build their real estate portfolio.
That's incredible. You're doing a lot in real estate. Amazing. Well, first, I'm curious, where is your portfolio? Where do you focus on?
Yeah, great question. So we actually monitor about 40 submarkets around the country. And we watch deals in those markets just to kind of see what's happening, because I think every market is different. They say real estate's a local business, and it is. It's local to that market. Traditionally, all the years that I've been doing the apartment business, I have always built my portfolio off the coach seat of an airplane. Um, I,
I
I,
love
I,
that.
I was in Chicago forever, didn't invest in Chicago on the multifamily side, and I live in California now and don't invest in California. So, but we really primarily pay attention to the Southeast and the lower Midwest. So we have a big portfolio in Oklahoma today, Tulsa, in the Tulsa market. Love that market. We own some assets in Florida and Dallas. And, if you were to look on a map, Stephanie, from Raleigh or Charlotte, North Carolina, down all the way to Dallas, that whole southeast smile of the US is really the markets that we like. Uh,
Hmm.
and then, there's some markets in the Midwest, being Oklahoma, Northwest Arkansas, Tennessee, a few markets in Tennessee. So,
Yeah, I love the Southwest as well. And Dallas, we do have a property there as well. And it's just, I'm responsible for writing the investor update every quarter, and it's just unbelievable. It feels like every month there's something new happening in Dallas, some new huge investments, some new huge firm moving their HQ there to Yall Street. It's just
yeah.
mind-blowing market. Um,
That's funny about Dallas, because Dallas, for probably the last 20 years, as long as I can remember, has been in the top 10. And for a number of years was in the top three of markets to invest in.
mhm.
Every year the major brokers around the country put out annual and quarterly reports of what their prediction of the market is going to be, what markets are going to be. And Dallas has traditionally been in the top 10, if not in the top three, for years.
Yeah, incredible. Truly
Yeah.
incredible. So let's start with the state of fundraising. Today I did a little update on what we have been up to a couple weeks ago, and I shared our experience with raising funds over the last month, but let's hear from you.
Yeah. So, it's been an interesting environment. And I think a lot has to do with the market cycle, which we can talk about later. But I believe that raising capital, there was a time when you could do a presentation, whether it be a webinar or a live presentation. For a number of years, I would put 20 investors into a conference room twice a week, and people would want to pull their checkbook out and write checks immediately. And those days are over. Today I think that there's a lot of people out there raising capital. There's a lot of deals for investors to choose from. And then on top of that, you've got investors that are in deals that distributions have been paused,
Yep.
that there's been capital calls, that there's disarray, which just again goes to the market cycle. But because of all of that going on, I think investors have backed up a little bit and have hit the pause button on their investing for the last couple of years. And a lot of what investors say today are, I'm not getting distributions from other assets. I just went through four or five, not one or two, but four or five capital calls. I'm a little uncertain. I want to just wait and see what's going to happen. And the one I love is interest rates are too high. But what does that have to do if you're getting a positive yield in an investment opportunity? So I think right now is the time that if you are a capital raiser or if you're raising money for a deal, that you should be nurturing relationships with current investors, past investors, and future investors, because the time will happen again very shortly, I believe, that these markets are going to open up and people are going to want to jump back in and invest.
Agree. Um, and I don't know if I've shared in this podcast before. In 2008, October 16, somebody said, "Buy American, I am." So '08, it's in the middle of a complete mess, right? In the real estate and economy overall. And that person is Warren Buffett.
Mm,
So I agree. I believe that now is a phenomenal time to buy, and these times are the best time to buy, right? So if you think about the people that are having capital calls, when did they put their money in? They put the money in when everybody was writing a check, when people were buying at 4% cap rates, when actually those deals did not make sense, right? So
right.
don't go with the flow.
Yeah.
As my mentor used to say, only dead fish go with the flow. Uh,
I love that. That's a great line.
just because people are pulling out, that actually means it's a fantastic time to buy, in my opinion. And you can negotiate better terms and you can get, sure, you may have, 2% higher interest rate, but the difference in payment compared to the discount that you get, is enormous. So with that, where are we in the market today, in your opinion?
Yeah. One comment too I'd like to say about capital raising right now too is I think that you need to, I always use the analogy with my coaching clients. I always use the analogy of being a fisherman. If you have one line in the water, you're going to maybe catch a fish. But if you
Yeah.
have multiple lines in the water, you're going to catch multiple fish. And I think from a capital raising standpoint, you can't just do one thing to try and raise capital. You can't just be going to networking events, or you can't just be running social media, or you can't just be running ads. You have to do everything, right? Because you're going to attract more people, and it's an effort of putting more people in your funnel today and building more of those relationships. So, I teach everything from networking and building relationships to, social media to webinars to, lead magnets and paid advertising and all the things in between.
Mm.
It's just like you and I both do podcasts. And our podcasts are out there and people are going to catch them and they're going to catch clips and it's going to make sense at some point for somebody. So from a capital raising standpoint, have multiple um, systems working for you that are going to draw people in.
And right, and when the market starts to get better, wow, you're gonna be fully ready,
Right.
right? Compared to
Right.
everybody else who may be dropping off or doing something else, changing what they do temporarily. It's
Yeah.
You're going to be ready.
Yeah, and think about all the people in your space that are off doing something else today because it got hard, right? And
Right.
you stayed focused, and I stayed focused, and only the strong survive, you know.
Yeah, exactly.
So
So yeah, let's move into where are we in the cycle, in your opinion?
I think we're at the bottom. I actually think we're cycling up. I always say, Stephanie, there's no geniuses in this business. There's only market cycles.
Yeah.
And, the markets go up and they go down for 8 to 10 years. And there's different quadrants along the way. And if you pay attention to the cycles and you look at history, I was at an event about a week ago, and it was it was a charity fundraiser, and it was an economic event. And the economist that spoke really talked about the residential market. And I think that so much in our economy is driven by the residential housing market. It even drives the commercial business. It drives car sales. It drives oil. The residential real estate market is a key market to watch in the cycle. And if you watch the trends, and this happened to be somebody who for 30 years has charted every year sales, production of new construction, new assets online, home ownership, home rentership. And if you watch the trends, there is no doubt right now we're at the bottom. And we've gone through the tough time. Remember, we peaked out, uh, everything topped out, and then we started to come back down. And you saw occupancy drop. You saw new construction start stopping. You saw, unemployment spike a little bit. You saw us hit some high inflation rates. But if you look at it today, inflation is stable, pretty well stabilized. Unemployment is low. GDP is up. The stock market is booming. And one of the things that could help us all is for the stock market to crash. But, I don't know that our current administration is going to let that happen. And, so much is driven politically, and as much as we don't want to talk about it, but it's driven politically. And I just think that, you know, take a look at what's happening around right now. You got a president in office who is a huge real estate investor, who
Yep.
made his fortune in real estate. He is going to bring this market back. and,
100%.
and yeah,
He
and
already did
I
get bonus depreciation, right? It went
oh,
back to 100% again.
there's so many things in that bill that are still being dug out. Bonus
Wow.
depreciation's 100%. Here's a great thing, right? If you have an investor who invests through a self-directed IRA, they used to not be able to use their 401k from their current employer. But
Mm-hmm.
in that bill, it now allows them to use their 401k from a current employer to
Wow.
invest in real estate. So there's a lot of things in that bill that are going to help the real estate space. But here's one of the things that I've been saying, and I've been saying this on my podcast a lot, is that if you wait right now for CNN or Fox News to say the market has changed, it's
Yeah.
going to be too late,
Yep.
because the change is happening now. And whether you're an active investor or you're a passive investor looking for opportunities to get into,
Mm-hmm.
get in now and have the wind at your back and ride this next cycle. It's a time in history when I think some of the greatest wealth is going to be remade for people.
Oh my gosh, yes. And let's just not wish the stock market crashes because that'll make it even harder to raise funds.
Yeah. Well, I think what will happen is people will start to pull out if that starts to happen.
I
So
don't know. We had a deal around that time. I think it was March or April when it was really down and people were like, I can't sell right now.
yeah,
So yeah.
yeah, it does go both ways, I guess. So
Um, but yeah, I agree with you. Just an example, I've been watching San Francisco Office, and I've been telling people a huge opportunity in my personal opinion. And now the rents are starting to go back up already. And so, as we all know, with real estate, it takes a little while for for the price to adjust based on the new rents. But now is the perfect inflection where rents are starting to go up, and you can still put some properties in contract at a very low price. Um, and, that not only helps you with getting a low basis in terms of taxes, you also can negotiate better when the next downturn comes, right? So you'll be
yeah,
able to give more discounts than your neighbor who bought at the peak. So there are so many benefits to buying at the bottom. It's just you just gotta hold it for a little bit. At this point, at least in the San Francisco office example. But
yeah.
things are back.
And I think all asset classes are like that, whether it's office or retail or self-storage or multifamily, you know, and
Yeah,
it might be painful and you might find it painful to invest today, but, I think that, a little bit of short-term pain is going to give you some long-term gain.
yeah,
And there's great incentives out there. You know, we have deals that are paying 7 to 10% annual cash flow,
wow,
and IRRs that are close to 20%.
yeah,
So there is there is huge opportunity out there.
agree, agree. Well, is there anything else that you think we should cover in today's market, Mike, that we haven't touched on, or anything else related to commercial real estate?
I think that one of the interesting things is you're in totally different asset classes than I'm in. And I think when you look at the multifamily bucket, there's so many different asset classes inside that bucket.
Sure.
If you look at it, investing in general, you have self-storage, or you have senior housing, you have medical housing, student housing,
Yep.
you know, you have retail, office, commercial, industrial, manufacturing. There's so many spaces, but when you look at that multi-family bucket and you have self-storage and mobile homes and RV parks and senior housing and all the different asset classes in that bucket, I tell people, I say, pick something that, excites you and get involved. Don't get in self-storage because you want to be with Stephanie, and don't get in multifamily because you want to be with me, but get in it because that asset class excites you and you believe in the asset class, because that's what's going to help you, create wealth and increase your cash flow for you as an investor.
Absolutely. Well, it'll help you also understand, right? When you do get those investor updates, what's happening in the market? Are they doing everything that you think they should be doing? Um, yeah, I don't know about that. Would I diversify? That's a good question. If I was a passive investor, I may also diversify a bit.
Oh, I believe in diversification for sure. For years they talked about diversification in the stock market, right?
Yeah,
Have an allocation in stocks, a allocation in bonds. And I still believe you should have some money in the markets, but alternative investments, you should have some money in self-storage and multifamily and gas and oil, right? In those different asset classes, because every sector is going to perform differently. And if you have that diversified investment philosophy, it's going to help you, over the future. There's so many investors that have come to me and said, "Oh, I want to put 200,000 in this investment." And I tell people, I say, you know what? I don't want all your money. Put
yeah,
some money here, put some money in this asset over here. or find another asset class, but don't give me everything. I don't want to
No,
be the responsible one for
no,
everything, right? If you build over time, great, but get started and put money in other places too.
agree wholeheartedly. And that, in my opinion, is a sign of a great syndicator because we actually care about your money.
Yeah.
I've heard people say, I'm gonna take money out of, I don't like, I'm gonna borrow against my credit card. I'm like,
Oh,
no,
yeah.
don't borrow.
Eh,
Yeah, we do not want to be responsible.
I've had people do that too. They say, "Oh, you know what? I'm going to get $20,000 on my credit card." And I'm like, "What's your interest rate? 21%." Well, where are you going to, you know, no, don't do
Yeah,
that. I'm not going to take that kind of money from you.
no. Oh, Mike, so great chatting with you, and glad to see your perspective of a responsible syndicator that, also aligns with mine. So thank you for being honest. Thank you for your insights. What is your podcast and how can our listeners get in touch with you?
Oh, thanks for asking. Our podcast is Multifamily Unplugged. We go live every Saturday morning at 10 o'clock, and I always have a great guest on. You've been on. Um,
I don't
I
remember, to be honest. Sorry.
Yeah, I think a few years back, we had you on, but um, and we're always talking about the same things we're talking about: market cycles, raising capital, where the deals are, where deal flow is. And I love doing these podcasts because you learn something new from somebody you talk to or interview. It's just always a great opportunity. So, if you want to reach out to me, anywhere you hang out on social media, whether it's Instagram, TikTok, Facebook, LinkedIn, just reach out, get me there, or you could send me an email. I love to connect, and that's Mike@MikeMorawski.com.
Thank you so much, Mike. I'm gonna try to find your first interview and link up here because your story is truly incredible. So hopefully people will be able to listen to both. Thank you so
Thanks.
much for your time.
Thanks, Stephanie. Have a great day.
You too.